All right, here we are. We are live back with another amazing edition of Top Trades. Been a lot of top trades lately. This market is just ripe for our swing trading strategy. We are stacking up winners right now. Like I've been saying in chat, got to make hay while the sun shines, and we'll ride this as long as we possibly can because it's not going to be like this forever. We've been talking a lot about how this rally off of those Liberation Day lows is getting a little bit long in the tooth. I think that's still true. But at the same time, we have to respect the market that we're in right now. We can't let all this noise affect how we're trading. So I'm here with Nick today. Nick,
Yeah.
thanks for joining me. Enrique's traveling today. Ian's on vacation. It's the summertime. Everybody's
Yeah.
having fun. We're here ready to buckle in though for some top trades. Got a lot of great topics to discuss today. We want to talk tariffs and Taco Trump. Is this all going to come to a head on August 1st? With the White House is also bullying the solar stocks lately. They've been trying to break out, making these big moves, and then getting smacked back down. I want to talk about the viability of some of those trades since some of the charts were looking great. Now they're looking not so great. We also have earnings season coming up. Enrique and I have been talking a lot about earnings. It's kind of his bread and butter when he's got a really good earnings plan. And I think he's dead on with some of the things he's thinking about how these earnings are going to come in and set up some interesting trades. I want to talk a little bit about market breadth, how this rally is expanding or contracting depending upon the statistics you're looking at. We'll dig into some of that. We want to talk about some sin stocks. Guns, booze, defense stocks are all up big. And then maybe we'll talk a little bit about Apple. Maybe we'll talk a little bit about Tesla.
Hmm.
Lots of stuff to digest in this market right now. So how you doing, Nick?
Yeah, I'm good. I'm good. I'm a couple rooms down from you right now. So I feel good. And like you said, it's the summertime lull. Markets are kind of even right now. A little up, but not much worth mentioning, but still so much going on. Full agenda, like you said.
Well, that's just it. So these type of markets, I don't mind it at all when we have the averages flatlining. Like right now, the S&P is basically dead even. It's just a little bit red. Um, Looking at my charts right here on my other screen. But at the same time, there's just so much moving under the surface. And that's kind of been the theme lately, too, with the ARC stocks, the tech growth, the unprofitable tech baskets. Those are all just streaking while we have the bullies in the room, your Bang Plus, you know, Magnificent Seven, whatever you want to call them, names sort of flatlining. And so the averages really aren't looking super impressive so far this week, but that's not stopping a lot of these trades from setting up. I mean, we were able to sell our sound trade for 150-ish% or so, depending upon when you got into that one. And it's not the only one that's moving right here. All those theme baskets, the from drones to AI to quantum, all that stuff is just rotating, rotating, rotating. Crypto looks like it's about to rock and roll again. So it just feels like for us and for our trading style, being able to just go with the flow and get into those themes that are working, take what we can get out of them, which has been a lot recently, and then just move on to the next hot one. That seems to be the way to go in this market rather than just sort of like, sitting around in shares of Apple. So, I mean, like, I love it. I don't think there's anything wrong with this. There's no summer doldrums where we are in our neck of the woods, which is great. I mean, it doesn't get much better than this. But like I said, we have to respect the fact that this is a unique market environment. You get these windows a few times a year when the stocks that we like to trade are just going bonkers. And that's the time where we have to slam the gas pedal to the floor and just get in and out of these plays. And then when we do hit the summer doldrums, which I think we will, I think, I don't want to say that it's tariff-related, but I think maybe in August, we'll see a little bit of that volatility creep in. We'll see the market, retrace a little bit. I don't know how we're going to retrace. I don't know if we're going to chop or if we're going to get a little bit of a drawdown or a lot of a drawdown. But I think at some point in Q3, we're going to hit some speed bumps, and then it's going to be time to reassess, to get tactical, to find those other groups that are moving, maybe expand our time frame a little bit instead of, flipping in and out of these killer trades we've been doing. Maybe we need to sit back and hold on to things for a few weeks, and let those trades mature. But that's what it's all about, adapting to what's happening in the here and now, what's happening on our screens, and just going with it. And then, being able to look back on these past few months and say, man, I booked all these winners. Now I'm pulling back a little bit. I'm waiting for things to set back up, because I think that once we chop along, if we're thinking about our 2020 analog, once we chop along in Q3, I think Q4 is going to be another ripper, and we're going to see a melt up into the end of the year. Barring some sort of bigger macro event, I just think that's going to be the case. I think it's going to be a great trading year.
Right. I mean, like how many people can wake up and say, oh, the market S&P is up 0.01% right now, the VIX is below 17, yet I doubled my money on SoundHound. Who's even looking at that,
Well, that's just it. Like, I think that, we're in the type of market too where I think the chasers are really helping us.
Mhm.
You have a very strong retail trade right now, and I've written about that a lot lately. Like, the zero DTE options market's on fire. There's a lot more people that are speculating in options right now, and I think that only helps us. I don't think it matters that it's crowded. I think it's actually a good thing that we have so many retail traders that are in there moving these stocks, that are willing to buy into these big rallies right here. And we're never going to nail the exact top. I mean, sometimes we will. Sometimes we get lucky and we really top tick a good trade.
Mhm.
But for the most part, you see a move like we saw in SoundHound, and I'll pull up a chart here and we'll talk a little bit about this trade since it's fresh on our minds right here. If we pull up SoundHound, you get a big candle like we got this morning, and it's pulling back below 13 right now. But I feel like you got to take that every time. You don't necessarily have to take all of your position off. I chose to take all of it off today. But in a situation like this, I feel like you got to take at least half of this trade off the table when you get a big gap and a double-digit move like this in a single day, because it's going to hit some turbulence eventually. That's not to say it's not going to go straight to 16, because it is trying to close this gap here. And to close that gap, it would have to get all the way up into the 1350s, which it almost did, tagging that area right there.
Mhm.
But you can see how these trades set up. It's very similar to what we saw after this consolidation here, after the big run up in the post-election time. If you guys remember, late October, some of these trades, this one didn't really start popping off till after the election, but you see these big moves. It went from 5 to 22, 23. I mean, massive move right there. And obviously, it got to the point where it got super overbought. RSI in the mid 80s right here, and it held those overbought levels, and it started slipping here in early January, and then it needed some time right here. And then what you see volume decreasing. You see it start to channel lower right there, and then eventually catches up with those moving averages, undercut the 200-day. It's not necessarily a bad thing. It wasn't here. And then it starts setting back up again. You see where it started moving higher right here. It drifted higher off earnings. But what I really liked about this trade was just how tight it got. And I didn't really draw another line underneath it. I can do that right now, but you can see just how tight the price action got for a stock like this. So it got to a point here toward the end of June where it was going to do one of two things. It was either going to break out or it was going to break down. And it had all the hallmarks of looking like it was going to break out. You see the bigger green bars right here. On those up days, you had more volume. And then this was the big breakout candle right here that we took back on Monday the 30th. That's when it poked its head up, and that's when it really started to run and catch everybody's attention. Another thing I really liked about this trade was how it retreated yesterday. So if you're in a situation where you missed the play like this, I think yesterday's red to green action really told you that this thing was ripe to keep moving, no matter what was happening in the rest of the market. I know yesterday people were kind of freaking out because the market was down and everybody's brains were just on go. I mean, we had a holiday week last week where the market just seemed like it couldn't stop going higher. And then yesterday morning, the financial media was telling us that, no, futures are down because people are worried about the August 1st tariff deadline, and Trump is announcing all these new tariffs. And the market opened down what? Like the NASDAQ and the S&P were down like 0.5%. And
Right.
and the way they were portraying it, it was like the end of the world. Like 0.5% down, that's normal behavior for the market. You
Right.
needed the market to reset a little bit there. But the fact that the market was down 0.5%, and then what was it, around like 1:30, 2 o'clock when Trump started tweeting or posting on social media, all of
Dude,
those
so dumb.
letters. Yeah, so the market was down like 1% at that point. Sound had already gone red to green. It took a big dip Monday morning, and then buyers immediately stepped in and pushed the thing green. That's a huge signal right there that something is going on with the stock. When you have a red tape, you have a stock that opens pretty deep in the red. I think it was down like 4 or 5%
Mhm.
right when the bell rang, and then people immediately started buying it up. And then it pushed higher and ended the day up, what, like 2.5% or so? Yeah, a little bit more than 2.5%.
Yeah.
Right there near its Thursday open right there where it consolidated a little bit near the top of that range. And then you get the beautiful gap this morning and the push up to 13. To me, that says, all right, there's the easy money right there. Let's take it off the table, book a triple digit winner. And now, like I said, we just spin, spin, spin. We can spin on to that next theme, the next, whatever it is, whatever basket of stocks are working at that particular time. So that's the type of market we're in, and we just have to respect that.
Yeah, yeah. And I think what I love about it, like, like the most probably, is that it's like not narrative driven at all. You don't have to like follow the headlines or anything like that to find a sound, right? Like, as of right now, I can't find any news that it like is the reason why it's jumping up right now. So it's like almost purely technical trading.
Yeah,
Um, so
which is
I
the
mean,
best. Which, by the way, that's the best kind of trade in my book. Like,
right?
and I think that can segue really well into like the solar idea that we wanted to talk about today,
Yeah,
because those are two totally different types of trades. Yes,
yeah,
they're both momentum trades, but the solar stocks are trading off of headlines,
sure.
which can be problematic. Like, I love it when I see a stock like Sound, like you said, and I think this is a really good point, that breaks out like this and moves double digits. And it's like, okay, well, where's the news? No, no. If you don't have any headlines and a stock is just breaking out purely on buying pressure and people piling into it, that's a million times more bullish than
Hmm.
a stock going up on like an upgrade or some type of headline, because the buyers are there organically and it's less likely to fizzle. I can't tell you how many times, and I know you guys have seen this before if you've been trading a long time, but let's say you own a stock and some sort of bullish news comes out, whether it's like an acquisition in the same industry, and it's like a sympathy mover on something like that, or there's a big headline that it's involved with, and the stock gaps higher, and then all the buying just fizzles, and the stock ends up red on the day, and it just can't follow through. It has no staying power. So you had that temporary bump from a headline, and then it just gets dogged. I hate those type of trades. I mean, like, I
Yeah.
don't mind news events, and sometimes news really works out, but the pure price plays like Sound, where it's just momentum and it's buyers versus sellers, and the buyers are just overwhelming the market and piling into it. No news to speak of. Those are the trades that end up working out really well, because one of the things that you understand, if you understand technical trading, is the idea that price happens first and it moves the narrative. So I guarantee you that if Sound keeps running, and I don't care if it does or not, we're selling the trade, we sold the trade, we're out. But if Sound keeps running, I guarantee you there's going to be positive news that follows the positive price action, and it changes that narrative. If you think about the big narrative winners since the last bull market in 2022, like what about like Carvana,
Mm.
which is like 100x or whatever off of its lows. The narrative down here in December of 2022 was this thing's a zero. They sell cars out of big Pepsi machines, right? I mean, like, it's done for. It was a ZERP play. Rates are going up. These tech growth plays, these no earnings plays are going to get manhandled in this market right here. And that narrative persisted until it started breaking out,
Hmm.
right? And then the narrative starts changing on the
Right,
stock and its
right.
possibilities. So price happens first, then the good news follows. And if you start understanding that concept, then you'll start to see why plays like SoundHound can really work, because once these prices start moving, then people start talking about it. Like, oh yeah, maybe this is going to be a big thing. Maybe SoundHound has this going on, and you'll see news articles about it. It changes the perception of the stock. Everybody likes a stock that goes up, and it's going to affect the media, who's very reactive to prices, and they're going to start speaking about it differently. And you see it happen all the time, from smaller companies like this to big companies like Facebook, Apple. It happens across the board.
Now, like with I guess solar particularly, would you say that a narrative can accelerate the trend that's already happening? And I guess what I'm thinking of is like I know Trump like issued that executive order or whatever Truth Social post yesterday. I don't know exactly what it was,
Yeah.
but he said clean energy tax credits are going to be cut sooner than expected. Who knows if it was at Elon? Who knows anything else? But
Right.
something like an Enphase or a Solar Hedge, Sunrun, any of those companies, it's already on a maximum downward trend.
Yeah. Well, I
And
think
this.
the thing about solar is they're all kind of weird and they all act their own way. Like, I know back before these stocks were caught in this multi-year bear market, I used to trade them quite a bit. And like First Solar was always the big name, and it kind of acted differently than a lot of the more speculative ones. Like, I think, isn't Sunrun Chinese? Or
Yes, they're all
so
they
yeah,
all different parts.
so so some of these, like Sunrun, is more speculative. At least it acts like it.
Yeah.
It's a smaller one, and you can see how volatile these moves can get. And a lot of these are news driven, and you can see like the big gaps lower because the story about these keeps changing out of Washington. It's like, are we going to get, these subsidies, or are we not? Or are they going to be included, and how much is it going to be? And so all of this news is jerking these stocks around. And so this one's trying to base. I think Solar Edge is the best looking one, because it has this nice big base. And despite the volatility, and you can see, again, it's similar but different. You can see these gaps lower. Like, it was down 25% on May 22nd, and that was news related. And then it was down 33% last month. That was news related too. And it's recovered from each of those, but the volatility is insane. And so if you get caught in one of those, like let's say you're trying to play this move right here and you're still holding, you get caught in one of these, you're done for. Your options are crushed. So
Right.
I put this in the too hard basket as far as trading is concerned until things maybe cool off. Again, I think this is a nice chart. I think it's a better chart than a lot of them, because I'd like to see a stock base out for many, many months, to just kind of prove that this change of trend can actually take hold and happen, and it's not just going to flatline for a while. But I mean, it's possible that like this thing gets jerked around more, and it just takes more time, and then you're stuck in this wide range. Like, yes, the moving averages are starting to stack up and curl properly. The 200 days is still flat. We could have a situation where this still looks constructive and it's all the way back down here to like $18, So that can really mess up your trade. You can get caught in some of those moves. Again, I could easily draw a line here, and I will. I don't know if it's here or here, depending upon how conservative or aggressive you want to be. But I feel like we're getting to a point where this is a base breakout. But just due to all the extra noise out there, it's really not something that I'm going to want to trade in this environment until maybe we get a little bit more continuity in like what the message is going to be with these stocks.
Yeah. Yeah. No, that makes sense. Okay, so I'm gonna pivot a little bit. You mentioned earlier earnings coming up. Now
Yeah.
I want to ask like two questions in one, in a way. HSBC, or I want to talk about a bunch of stocks that I hardly ever hear you talk about and that you don't trade. They're just a little bit boring, right?
Yeah.
So HSBC this morning comes out and downgrades JP Morgan, Goldman Sachs, Bank of America, right? And I think they did it on the back of like the massive rally that we've seen in them in just bank stocks generally since April 9th or 10th. And then I think last week we passed like the annual Fed stress test for the banks, so we're good in terms of when a crisis hits. But the bank stocks are taking a pretty big hit, and JP Morgan's going to lead us off with earnings next week. So I guess like what do you think of like bank stocks here, just financials generally? But then what are you looking at for earnings? Do you have any cool setups or any outlook that you want
I
to talk about?
I think financials look good. And I
Mhm.
think you see situations like this, and like financials really isn't a group of stocks that we trade
Yeah,
at the trading desk, just because they tend to not move as much
they're
as
boring.
as some of the more exciting stocks out there. So it's not really a top of mind group for us as, swing traders. But
Yeah.
I mean, just from a charting perspective, I think this is a nice breakout right here. A lot of technicians say you need the financials in a bull market. And I think that's true too. They obviously took a hit along with everything else during the whole Liberation Day thing. But I mean, this looks really healthy to me. And this is XLF. This is the financial spider right here. So this is the big boys in the group right here. But I mean, I think this is all healthy action, retracement of this breakout here above those February highs right there. I don't know really what to expect earnings wise from them. You said JP Morgan was going to be the first to report right here, and they're getting hit today.
Mhm.
But I mean, again, that's probably more analyst related. I'll take off this exponential moving average here too, just to sort of clean this chart up. But I mean, but again, I think these were getting long in the tooth anyway. I think that
Yeah.
over the past few weeks, like this near vertical move here without a lot of pullback, we need to bleed off
Yeah.
some of that exuberance right there. And I think that just makes sense no matter what we were looking at here. I think it makes a lot of sense for this to come back to the scene of the crime. JP Morgan back to 275 would make a lot of
Yeah.
sense to me before it tries to springboard off of that again if it's going to continue higher.
Right. Right.
I think the bigger thing with earnings, though, is I really like Enrique's idea, what he was talking about last week, where he was saying that we're in a situation where the last earnings season, we really didn't get a lot of the tariff nonsense that maybe the street was expecting. And so the pressure was off. But now we might be seeing more revisions. We might be seeing the fact that, like, okay, prices have gone way up since April. Okay.
Mhm.
And when prices go up, expectations go up. So we could be in a situation where expectations are now much higher than they were at the end of Q1. And so when expectations are high, sometimes beating isn't enough. And if you are just making numbers, like say you're hitting your estimates and not beating them, and then you offer some sort of squishy guidance, which I think in this environment is entirely possible, whether we're looking at financials or anything else, then you're going to have people that are saying, all right, I want out. Okay. And that's just a natural reaction at this time of year when you've had a market that has recovered so sharply. Like, and again, this is another conversation that Enrique and I have had, in depth. If you look at something like Robinhood, I think Robinhood's a great stock. I think it's a great long-term story. It's one of my favorite longer-term 5-10 year stories on the market. I'm super bullish on Robinhood. I think it's going to be very tough for them to continue to impress investors with all the news around it and how high it has gone. I mean, let's just get out the old ruler here. From the April 7th lows here, it's up 205%.
Yeah.
So a stock that's up 205% in just a couple months, and then they report earnings at the end of July, right? Yeah, at the very end of July, they're reporting earnings this month.
Yeah.
I mean, they might get a positive reaction from it, but I think more than likely, you're going to run into some sort of resistance from investors where they're going to say, like, I was expecting, you to double your earnings estimates. I was expecting some other big announcement about tokenization or whatever. So you're going to be in a situation where it's going to be very hard to impress people. It's like a stand-up comedian. You can't lead with your best joke, right? I think that their rule is like they lead with their second or third best joke to grab the crowd, and then they sort of go into a longer story, and then they try to build their set a little bit. And I think that's going to be the same thing with stocks like this, where we've seen these big fireworks, this big finale from a lot of these companies that have just gone straight up, and it's going to be hard to top it. And so that's when you're going to see these periods of consolidation, of backfilling. One of the things that Enrique and I like to talk about is like, okay, if this stock goes down, like how far would it have to go down before I really started getting worried about the bigger trend? I think Robinhood could go down into the 50s very easily, and you have nothing to worry about as far as the longer term trend goes. That's just the ebb and flow of the market right there. So, you have to take into account performance leading up to earnings, I think, in order to get the real picture of like how investors are going to react.
Right. So do you think this is like a, I mean, it's definitely a little bit different, but do you think it could be similar to like an Nvidia story from last year, where it's like every single earnings call was like memes of Jensen Huang standing at like a stage of like an EDM concert, like,
Yeah.
you know, pushing
I,
forth their numbers and you couldn't stop hearing about it, but they're still hitting new highs right now.
right.
Even
I think that's a great
uh
analogy, and that's just it. And that's kind of the intersection between like, the market thinking like the market does and long-term fundamental investors thinking like long-term fundamental investors do.
yeah,
The market looks ahead months, the really good longer term investors are concerned about years and decades. I think Nvidia is the perfect example of a company that like they're minting money. Like there's been, I mean, like as far as I know, there's been no slowdown in
yeah,
in their business at all, and yet the stock has gone nowhere for a year,
yeah,
essentially. So I mean, and again, this is where markets and fundamentals kind of pull apart, where you have to understand market structure and market mechanics and how it all works. You're going to get into periods where there's a stock that's just red hot for 18, 24 months and nobody can get enough of it. You can't buy enough shares. You can't own enough of it. No position is too big in these stocks. And then you get to a point where it's going to need to digest. The fundamentals might be going like this, but price, they're underpriced for a period of time and then they're overpriced. They can stay overpriced for a long time, but eventually it's going to need to come back to the mean and maybe drop below that. And we've seen that in Nvidia. Again, Nvidia is right by all-time highs right now. But as far as like longer term momentum is concerned, it's just up a few percent since June of 2024. So, it's needed to cool off. And that's just part of the life cycle of any bull trend here. There's nothing wrong with it. I mean, I don't think Nvidia's business is in trouble. But at the same time, I wouldn't be surprised if Robinhood did something similar at some point because it hit these. I mean, like earlier this year, I was like, I think Robinhood could be $100 stock, and that felt like a bold thing to say,
yeah,
right? I mean, it was traded at like $40, and to say a stock's going to be $100 by the end of the year, like that feels like a reach. Well, it tagged $100, a few days ago. So it
right.
all happened very fast. People couldn't get enough of it, and there's going to be a point where people start questioning that and being like, "Well, I don't know," or anybody who bought in the last portion of this. Look at these big volume bars right here. I mean, people couldn't stop buying it, in the 90s right here. Those people are not going to feel so great about those buys when it's trading at $68,
Mhm.
if it gets down to there in a few weeks. They're going to be deep in the red. They're not going to want to stick around, and they're going to get worn out, waiting for it to go higher. And that's exactly what happened with Nvidia. I mean, all we saw on CNBC was Nvidia for over a year.
Right.
And so anybody that bought during that time and was just sitting flatlined in their trade or maybe down a little bit and watched the rest of this market just continue to churn higher right there, they feel like they're being left out and they're like, oh, this isn't working. The stock isn't working. The stock is dead, or whatever they say to convince themselves. And they get out of it. And then you have this shareholder turnover. And then eventually it can reset and build and start another push higher. But I mean, that's how people get caught in these. They buy into these last phases of the market because they wait until they feel comfortable owning something like that, because they want that confirmation from price. They want it to, this stock only goes up, so that's when I want to own it. And then they all pile in, and then it stops going up, and they become disillusioned with the investment, and they get out eventually. They get out slowly. Some
It's
people
the
faster than others.
Yeah, it's the problem with just like I think like narrative investing or narrative trading,
Yeah.
That's how many people lost money on GameStop, and that was an extreme but similar example, I think, to what you're talking about. Um, let's talk about breadth. You mentioned that at the start. Read something that said the I mean, it's like the age-old thing where it's, the market's up, but how much of the market is actually going up? Is the Mag 7 just pulling the indices higher where nothing else is rising? Obviously, we have equal weighted ETFs now. I
Yeah.
think Bloomberg posted something today that said the rally this year or since April has been concentrated, but you have some numbers that contradict that, right?
Well, I mean, I think it depends on how you look at it.
Mhm.
I was looking at some stuff Grant Hawkridge posted, and he does really great breadth analysis over at All Star Charts, um, and just some of his recent numbers, I mean, are just insane. Where it shows like the weakness in the market is actually ebbing and participation is expanding. We've talked a lot over the past few weeks about these theme baskets and how those are all starting to trade higher. I mean, and if you look at stocks like in the ARC complex, I mean, these are all catching and trending higher again. A lot of these weren't participating in the early phases of the bull market. Trading over at the trading desk was a little tougher than usual during a bull market period in the early part of 2024 because we had a narrower market. We had NVIDIA and then a few others that were just yanking everything higher during Q1 and Q2 of 2024, and there wasn't as much participation from the smaller stocks. And now we're starting to see the smaller stocks catch and start to move higher. So I think that's bullish. The NYSE new highs minus new lows are starting to surge. So we're seeing other groups that haven't been performing so well start to catch higher, which is super bullish, I think. And again, one of the things that we talked about back in the spring was, how is the market going to pause and how is it going to correct? Because there's different ways a market can correct. It can correct through time or it can correct through price. You can have a big move lower that drags everything lower, or you can have kind of this handing the baton off chop where some stuff starts to move lower and other stuff flatlines. Right now, we're in a situation, and it's only been a couple days now, where the Mag 7s have been down to flat, and a lot of smaller other stuff has been moving up. And that's just fine. So on the surface, you have a consolidation type of situation, but under the surface, you have a lot of trades that are working, that aren't necessarily reflected in the major averages. And that's a great environment too. So you can have two really good trading environments where, you got everything going up and it's just a total melt up, and you're probably going to have some of the Mag 7s leading that or some of the bigger stocks leading that. And you can have situations where maybe we have like the PLTRs, and the Robinhoods and some of these other stocks start to run out of steam a little bit. And then you have these also rans and these other groups start to rotate into leadership roles and start to catch. And so you can just sort of rotate your trading focus onto other things. And I mean, me, I like to trade the more speculative stuff that has a chance of, moving a lot in a short period of time. Maybe not the type of action you get from like a Google or an Apple, but at the same time, you're still getting those powerful trades, even if the market's not doing much. The market, the major averages.
Right. And I guess speaking of Apple, I want to talk about it a little bit because I think you guys talked about it last week, you and Enrique. But obviously last week they announced that they're gonna like outsource their AI needs to Anthropic and OpenAI, right? And to me, it sounded like they were almost like giving up on their own AI efforts, and I think they were. And then I guess yesterday they announced that their top like AI models executive was leaving to the Zuckerberg Mephistopheles,
Right.
that bet, the $100 million. I would love that. If I
It's
only
hard
chose
to turn
that
down a
career.
$100 million job offer, I
If
think.
only I chose that career path. Yeah. So like, what do you think of the stock here? Like, it almost seems like it can't. I can't help but be bearish on it.
Yeah, I mean, like I feel the same way. But I try not to let like some of my bigger bearish narratives like influence how I feel about a stock, because I do have I hit on this with Enrique last week, where I think it's very easy to make a bearish Apple argument where,
Mhm.
it's the same old stuff. Apple doesn't innovate anymore. They just sit on their cash. I mean, they mint money. Um, but my main bearish argument has more to do with the fact of uh, I think that it's possible, not probable, but I think it's possible that Apple is entering into a different period of perception from the investing public. Apple's been, or it was, maybe it still kind of is, like the dominant tech stock. I think NVIDIA took its place, for a bit there, but it's the dominant, understandable tech narrative in the market, and it has been for, a couple decades now. If you ever read a longer term think piece on the markets, somebody inevitably will talk about if you would put $1,000 in Apple or $10,000 in Apple in 2003,
Yeah.
it's one
Plus,
of those great examples of like this is what the market can do if you can find these big obvious winners. And Apple was never a secret. Everybody knew the stock and loved it, and it went up, 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 up for years. Is it in an extended funk now where the public perception is going to be that, yeah, they make a lot of money and they're a good stock, but they're not a growth name anymore that really gets people excited? Is it becoming like a rocking chair type of stock where it's like,
mhm.
yeah, Apple's in the Dow, Apple's in the NASDAQ 100, everybody knows about Apple, is it going to become like an IBM or, like an elderly tech giant? I think that's possible.
Mhm.
But I'm more concerned about, how the chart looks. And Apple hasn't done much of anything.
Right.
Um, it looked like it was posting a really nice breakout back here about a year ago in the summer, and it had some retracements. It went straight up. I mean, it absolutely went straight up after the election, and it hasn't been able to regain any of that momentum since then. Now you could say, okay, well, everybody's worried about Trump tariffs and all of that, but I mean, for a stock like this, as far as a trade goes, and as far as like where I'd want to be a buyer of it, I don't think the chart looks bad necessarily, but I'm not really interested in this until it can get its legs up, out from under it. Like we're in a situation here where here's the tariff meltdowns back in April. It's barely filled that gap, maybe not even filled that big gap from April 3rd when it was down 9% on the day. So we got a lot of other stocks out there, a lot of other better opportunities where, if Apple were really a outperformer, it would be up here back in the 250s, 260s again. It would be challenging those highs from late 2024, and it's not. It's stuck. It's below a descending 200-day moving average. I would like to see it perform a little bit better. I would be more likely to be a buyer of this in the 230s than I would be in the 210s. And I
Mm.
know, and this is something we talk about a lot on here. I know that sounds weird to be like, I'd rather buy this at higher prices. And that's because, like, even if we do get a little bit of a breakout here to like, let's say 215-ish, I don't think there's any guarantee that it's going to quickly break out above that 200-day and extend. I mean, we could be in for another 6 months of chop in this stock, and then you got a dead money trade right there. Even if you're thinking about it as like say you wanted to hold it for a few months or whatever. Why would I want to buy something like this that could need more time to set up, that might need to ping pong around between 200 and $220 for a while to, really put in a nice base, when I could be buying some other stuff that's breaking out to new highs and has a much more constructive looking trend than a stock like this that's just been a mess
Right.
lately. And so that's how I look at something like this. And all the other stuff I talked about, the narrative stuff aside, the chart is going to determine how I act on that. And all those other thoughts, I think it's important to think about things like that, but I really can't let them affect my trading, because I mean, how many times have I had like a thought, about a company and prices prove me wrong? More than I can count, where it's been like, oh, Amazon's doing all this all wrong, and then the stock doubles in a year. So, I mean, I can think
Right.
of a million examples of when that's happened. And so, like, looking at a chart like this, I think the most important thing is like, has it based out enough? Are we seeing more constructive action? I'm going to say no and no on both of those. Doesn't mean it's a bad stock or a bad company. I don't think Apple's going to stop making money anytime soon. They sell a bazillion iPhones, and no one's ever going to give up their iPhone. At least not yet. Not until they implant, your phone in your brain, and then you can just look through your eyeballs at whatever you're doing. But I think we're a few years from that still. So yeah,
Yeah, yeah. I'm sure by like 2027 we'll be there.
you
Yeah,
think?
no, no. Yeah, narrative follows price. I think that's the grand theory there.
Yeah,
Okay. Before we get into some tickers, some charts and stuff like that that everyone's asking about right now, two things. The first, I want to talk about sin stocks. Okay,
okay.
because there was a story on Bloomberg today that was like, under Trump, sin stocks are doing well. Everyone's dumping ESG. Everyone's going for guns, booze, and smoke. So there's an ETF ViceX that holds, the Philip Morris, the British American Tobacco, the Anheuser-Busch, the Heinekens, the stuff like that. Um, so I don't know. I know you had some opinions on that from a political standpoint, whether this would look something similar under Biden as it would for Trump right now.
Well, okay, a few things about this. So like I think it's weird that like defense stocks are tossed into the sin stocks. That's kind of
Yeah.
odd. I mean,
Yeah.
I guess war is bad, and everybody can kind of agree on that. But I think there's different. Yeah, like Patrick just said, what kind of stocks are sin stocks? Yeah,
Right.
I consider sin stocks like tobacco or alcohol or something like that. But I think there's bigger trends at play right now. And okay, this is not a political statement. I think this is just reality. I think that anything that negative that happens in the world or can be perceived as negative is going to be twisted by the media into something anti-Trump.
Yeah.
That's just how things go. Um, that's the way media coverage is shaped. If something bad happens in the world, there's going to be somebody that's going to be able to draw some lines to say, well, this is because of some sort of policy from the Trump administration or whatever. You know what I mean? So we're going to see a lot of that. And so I think that's where this idea comes from. But if you look at something like Philip Morris, I mean, this stock has been on a tear. And that's because, I mean, those Zyn pouches are so popular. And they're just, I mean, they cannot, there's like shortages of them. They can't even make them fast enough. So, I mean, that's a really good example of, I guess, a sin stock that's like really working. And Philip Morris has gone from like a dividend stock that like nobody wanted to hold on to just a absolute world beater. So you have this like, old school, like rocking chair consumer staples,
Yeah.
like cigarette company. Nobody really smokes anymore. At least, I mean, the smoking's been downtrending my entire lifetime.
Yeah.
Uh, but like they found a new niche, and I think it's even overtaking like vaping. You know what I mean?
Yeah, definitely.
So they've figured this thing out, and the stock is an absolute world beater. I think it's a great stock. I think it's a great story. It makes a lot of sense. Um, but then you look at the opposite side of that, and you look at like Brown Forman, the liquor company that owns Jack Daniels and a bunch of other and I think it's like what BF.A because they have like preferred shares. Look at this. And
Mhm.
this again, it's following societal trends. Young people don't drink booze anymore. Alcohol consumption's way down. So you see this particular sin stock looking like death, and you don't want to own it. So that's why I try not to like, lump these things into these categories. Howard Lindzen, the venture capitalist, has a great basket that I think makes more sense than sin stocks. He calls it the degenerate index, and he puts anything that's like probably like, I don't want to say antisocial, but like he puts like his own spin on the sin stocks where he includes things like Robinhood because it's like it's gambling on predictions markets, and then along with like Philip Morris and some of these other things into this basket that he calls the degenerate basket, and I think that makes a lot more sense um than that. But again, like trying to group all these things together, like like a BFA, and I know they own a bunch of different properties. It's Jack Daniels and a bunch of other like liquors here, but you can see here where the trend is obviously lower. Then you look at Philip Morris where the trend is obviously higher. You look at Bud, and I think it's somewhere in between. I think they're doing okay. Yeah, that's not a bad looking chart uh, at all, right there. But like these arbitrary baskets, like I'd rather just like take an individual stock on its worth and think about the trade from there, because sometimes the narratives don't really line up with the price.
Right. Right. No, exactly. And Patrick was just talking about a degenerate ETF getting his attention. Right. No, that's
Yep.
exactly what you've been talking about.
Yeah. Yeah.
Um,
Absolutely.
yeah, so that's great. All right, let's shift to crypto a little bit. I want to talk about Bitcoin and Ethereum.
Yes.
There have been a few questions about BTBT as well, Bit Digital, the miner.
Yeah.
If you want to look at that chart, it's soaring today. Um,
So here's the thing. This thing has been going straight up. And I know it has something to do with Ethereum. Can you give me like the 2 second uh story about like why this thing is taking off? It's Ethereum related, right? There was some Ethereum news where they're doing something with that.
yeah, so it just dumped all its Bitcoin for Ethereum.
Oh, okay.
That's essentially what it was doing. I don't exactly know when it happened, but the news from this morning was that.
Yeah. Okay. Yeah. I like it. I think I think it's going to get volatile. I think a lot of
Mhm.
these are going to get volatile, especially something like BTBT. I mean, when you have a move where it basically doubled in a week, um, I think there's going to be some sort of a reset, and maybe that reset's going to be down into the low threes
Mhm.
right here, or maybe it just soars all the way to $5. But I find it difficult to buy a stock like this that's in no man's land up here with all these gaps,
Yeah.
because you got all these air pockets where it could very easily drop. And then what do you do? You know what I mean? You're stuck holding a big loser. So if I'm looking for an entry, well, first off, I'm holding it. I'm taking some of it off, you know, right now on this move today because it's already pulling back from
Mhm.
those early morning highs above $4. But I would be looking for it to see how it acts if it starts filling these gaps right here. Like down here, if it wants to come, you don't have to go exactly by the 200-day moving average, the red line right there. But if you wait to see how it fills this gap, if it seems to just fill it and then want to bounce around here, maybe you get a better entry on something like this. If it
Mhm.
looks like it's going to fill it and then fizzle, maybe you have a situation where it's going to be a total give back and it's going to want to come all the way down into the mid twos. But I just find it really difficult to buy some of this stuff because I got nothing to trade against. Like, I think your best bet at a shelf of something would be those former swing highs right here from back in December, early January, and maybe that'll act as a floor. And I think that maybe would give you, a hint that like if it holds the 370s and it starts to bounce again, maybe we can go to the fives, in short order. But I think that's a stretch, maybe. I think it could totally do that. Don't get me wrong. Like when little stocks like this catch fire, they can run and they can run farther than you think. But at the same time, if I'm trying to pick a spot where I want to buy it, I'm going to have a tough time feeling comfortable with a buy right here. And if you're day trading or if you're like very vigilant with your stops and you're willing to babysit this thing, then I think it's totally fine to take a stab at it around here and say like, okay, if it goes to 450 tomorrow, great, I feel good about it. And if it fails, then I'm out. No harm, no foul. I don't think there's anything wrong with that. But for me, I want to have a little bit more evidence that like, yeah, it's going to continue this type of move. Now, that being said, talking about narratives, I think the narrative around Ethereum is quickly changing. We have Tom Lee on TV talking
Mhm.
up Ethereum nowadays. We have all the tokenization chatter. We have this beautiful shakeout. So everybody getting caught in this breakout right here, and then it immediately getting shaken out of this move and it resetting and then coming back to the middle of this range and trading nice and tight like this. I think Ethereum could pop off and go to $3,500 in short order from here because I still think Ethereum is small enough, where it still has that juice that Bitcoin used to have, where it can just make those monster moves that last for a couple days. Like, I mean, you look at this one right here, May 8th, when it went from 1,800 to 2,200 in a day, and then it continued all the way up to 2,500. These powerful snapbacks. I think Ethereum still has a move like that in it, maybe
Mhm.
even more, because again, price leading narrative. I can feel the tide changing with people, the way people are talking about Ethereum, because they've hated it for so long. Because remember, Bitcoin and Ethereum, totally different charts going
Yeah.
back to 2021. Like Ethereum is nowhere near its highs. Bitcoin's right there. Bitcoin could sneeze and be at all-time highs right now. But we never got above those November 21 highs,
Mhm.
back in 2024 or earlier this year. It's still close to 5K. We're
Yeah.
50% below that right now. So I think there's plenty of room for this to run and catch up and become like the dominant crypto narrative.
Mhm.
I'd love to see that happen. I think we'd get a lot of good trades out of that. But yeah, I think that if this thing really starts going and if it takes out four, because it was at 4K back in December. Look, this is a huge drop.
Yeah.
Let's not forget here that this thing went all the way down to 1,400. It was down 65% from December to April.
Yeah.
Got housed right here. So, if this thing takes that back, if it takes back 4, it's going 5. It's going to 5,000. I
Yeah.
think hands down. So yeah, I'm excited about something like that, and I think the miners are waking up too. Like I think somebody asked about a Mara chart. I really like Mara here. It's something I might buy as soon as later this week. I like it because I hate the stock, number one. But I think it's building nicely here. We had the nice pop. And they're starting to move a little bit before crypto. Sometimes the tail wags the dog here. But I mean, I think Mara could pop to $25, in the right environment if we really do start taking off right here. Again, I hate the stock. I hate the company. I used to trade it all the time. It was the best trading stock, like back in like 2020.
Yeah.
21. Such a great stock to trade. The narrative got all muddled, and it became just a mess. It started decoupling from Bitcoin. I mean, you look at the price action here since 2022. It's been a total disaster. But I mean, if it really is crypto summer, and this Ethereum narrative starts shooting off, and people are back in Bitcoin, Bitcoin's pushing to 115, 120. I think in the short term, it could send the stock higher. Earnings worry me because they're at the beginning of August, but I think we could even have a run up into earnings. I would not want to hold this thing over earnings because who the hell knows what they're going to say. But yeah, I mean, this is the type of chart that I like right now. And maybe that's where the rotation takes us next too. We've had such good luck with quantums, and even you look at I think some of these are still setting up, like IONQ. That's an oldie but a goodie right there.
Yeah.
I feel like we got a little bit of a breakout here. And again, it's all about tight price action and then a big pop. We haven't really seen the big move. I mean, that's an 11% day right there. It doesn't look like much because this stock can be so crazy, but we haven't seen that big green bar yet. Maybe we do, or maybe people move on to crypto. I still think a lot of these are in play, but yeah, crypto definitely has my attention right now.
Sure. Yeah. A lot of options activity with IonQ actually today. But yeah, so I guess the miners don't care about them fundamentally. They're just like technical trading vehicles, like the HUD 8s, the riots.
Yeah, they're junk. I would never want to own them longer term.
Yeah.
Maybe some of them might have something interesting going on eventually, but I think they're just good trading stocks, or at least they were. Yeah. I think they have a chance to be again. But yeah, they just worry me. And Riot, I mean, it's all the same thing.
Right.
No, similar charts. I think Mara has the best setup right now. Just being down here hugging its 200-day and then popping up above it, just sort of nicely consolidating that big move from what was it, the second.
Yeah.
So I mean, I like that more than I like Riot. And then Clean Spark has just been, that's been an oddball too. It's not a terrible chart. I think all of these are kind of going to move the same. I don't really think it matters about the vehicle. Just pick one that's really liquid.
Right.
But yeah, I don't like the companies. I don't think there's anything to say about the companies.
Yeah, I guess I don't really understand them super well, and that's never good. I don't understand much super well either. But do you want to jump into some charts?
Yeah, sure.
Some chart requests. People have been asking throughout. So one of them soaring today, SoFi, SOFI.
Oh, SoFi, yeah.
Yeah.
So this is kind of this is like a crypto bank play, right?
Yeah, something like that.
I mean, it looks awesome. I think it's tired here, and I think this is the beginning of what could be an exhaustion candle. And I'm not saying that in a bearish way, but I think maybe it just needs to retest to maybe 18. Because I mean, you see these moves, and again, this was a great move. We have to respect the fact that we're hockey sticking right here. I mean, when it gets easy to hold a stock that goes up every day, that should set off some alarms in your head. You look at this price action right here since the middle of June, and you see there's one red candle where it was down 1%, and then on July 1st, it was down 3%. So those were your biggest shaking the branches type of day where people have gotten quote unquote scared and wanted to sell. Nothing else in between there. Every other day, it just gaps up higher a little bit and hangs out. So it's gotten too easy. And when things get too easy, that's when you get a 10, 20% down day. in some of these stocks. I mean, I don't think that's necessarily going to happen in SoFi, but look at the difference between these candles right here and these candles right here. You got big reds and little greens, this nice tight price action where we went from 15 all the way to 20. This move's probably cooked at some point right here, and we're going to need to see a reset. I would say probably down here to these levels right here. Probably down to the 16 something. Just take out these highs that poked us head up, and you see where price bumped its head back in February and back in December. It's not going to be perfect. It's not going to be like, by the penny right there, but you're going to see a move like this where it gets a little stretched to the upside, and then you see the big upper shadow on the candle here where it's coming back down. If this thing closes a little bit lower and starts to fill that gap, I think people are going to be like, I got to get out of this,
Yeah.
And then you're going to see a move down to the mid 16s, and maybe that provides an even better entry for you, And when you're timing entries like that too, I think it's important to wait for the green candle. So don't buy on the big red candle that comes down and tags this because it might need more time, but wait until you get a green candle. And then maybe into the afternoon, it's up like 2-3%. You see like this confirmed bounce off of like a level that you like. That lets you know that it's probably closer to actually continuing the move rather than just sort of like milling around a little bit and continuing to shake people out. But I mean, that's, again, everything's so skewed right now because we've gone straight up. Like if we take it from the peak from earlier this morning, if we get down to there, that's a 20% drop. I mean, I know it doesn't look like anything on the chart, but that's because we've gone straight up. So a 20% reset in the stock, and then you get a better chance to buy down here in the 17s or whatever. Yeah, take that.
Right. Yeah. Speaking of moving averages, I guess. Dwayne was asking about FSLY, Fastly.
Oh yeah,
I guess it's trading at a 50-day right now.
This is a stock I haven't looked at in forever.
Yeah.
This was a good trader back in the day. Yeah. I mean, it's riding its 50-day right here. It's still below a flat 200-day. I don't know that much about the company, to be perfectly honest with you. I remember this chart, but like going back, it's been a mess for a long time, and there's no discernible trend here other than sideways nonsense. Like, again, would anything change if it broke above this 200-day right here? I mean, obviously not, because it did that twice. It did it in May, it did it in June, and then it came right back down. It was $8 both those times and came right back down to 6. So I feel like this one is still in the basing period and it needs a lot of work before I would really like it for an extended move. That's not to say it won't shoot back up here. I think if you're like really scalping, or if you're very, very short-term minded, it looks pretty decent, and you could see a move from, $7 to $8. And that's great. That's a great trade right there, but I think it's more of a mean reversion type of trade, and I wouldn't trust it any farther than that. I need to see this thing, convincingly get above like 850, hang out for a bit, start to fill this gap, get back up to $10. Then maybe we're starting to see a change in trend and actually enter a new uptrend. But I don't see a new uptrend in this yet.
Yeah. Just kind of be patient.
Yeah.
I guess we can probably fit in one more if you want.
Yeah.
I'll just pick a random one. Let's go Innodata. INOD.
INOD.
Innodata. I mean, the chart doesn't look terrible. INOD.
And I see this in contrast is a great looking chart. We have, it looks like it likes to move on earnings. We have a confirmed uptrend here. It was very obedient to its 200-day back during, this is all the tariff nonsense. And it undercut and then immediately got buyers, fell again immediately. It's picking up buyers at its 200-day. So people are picking this thing up on the dips. That's always good to see. It looks a little tired today. But is the market just sort of milling around? Yeah. I would say that this doesn't look half bad. Maybe needs a little bit more time in here before it really goes. But I think you could play a move on this one from 50 to 65. I think it's going to eventually get back here and test this. This is a bigger pattern, but it's been very constructive. When you get big earnings moves like this, I mean, it was up 75% following earnings right there in November. When you have 75% in a day, it's going to take some time to bleed that off. Okay. And it's taken a lot of time. That was in November. All right. And it's never gotten below this gap right here. It's never fully closed that gap. I think that's bullish. It's building right now and it's getting pretty tight. Um, it might take a little while, but I mean, I like I like the chart. I like it. I like that it's in tech. I think that's a good place to be. I like that it's not a bigger, well-known stock. At least I don't think it is, because I really don't know that much about it. But I mean, I think this is the kind of place to be looking. I think that this would be a good trade with a longer time period too. You know,
Mhm.
like waiting for some confirmation that it's going to get above this area. It's one of those ones where I'm going to be like, well, if we can get a close at 53, since it's been toying with that 53 level, and today it broke above it and then dropped, maybe it's not ready. If it closes above 53, then maybe it's got a chance at making a bigger move to 60, 65.
Yeah, right. All right, well, it looks like we're a minute over right now. So we need to let everyone get back to their days. Um,
No.
any any final thoughts you wanna leave everyone with?
Um, yeah, I mean, like I was saying since the beginning, this market is ideal for our trading strategy, and that's great. I think we should embrace that. We've been doing that. Uh, these stocks that we've been buying, these calls on these stocks, they've been working out. We've been putting together a pretty long list now of winners. Um, I think in the back of our heads still, we need to be thinking about what happens when the music stops and what a corrective move is going to look like and how we're going to need to change our trading moving forward. Because the most important thing going forward from today into the rest of this month and into August and September is making sure we don't give back all of the gains that we made over the past few months. That's the biggest danger as traders right now, is getting locked into this is how the market is and this is how I'm going to trade it, and then not adapting when things change. Because if you don't adapt when things change, that's when your account starts doing this. All you do is churn. Everybody talks about how beginner traders, they always blow up. They always like start with a $10,000 account and then they go to zero and then they have to save $10,000 more and they do it again. That's not really what happens. I think that does happen to some people, but in my experience, what happens more so is you get your account up to 20,000, you get your account up to 25, then you go back to 20, and then you go to 25, and then you go to 19, and then you go to 27, and then you go to 15. You know what I mean? You
Yeah.
get stuck because you get hooked on how things are right now, and then you refuse to adapt until it's too late, and then you don't catch the next move higher because you're too conservative because you got burned on that, you know what I mean? And you get stuck in this negative feedback loop and you get stuck churning your account. That's not what we want to do. We want to hang on to those profits and we want to adapt, change our time frame, change our strategy a little bit if that's what needs to be done in August, September, if things get a little weird. And then I think when the market starts melting up again, we can go right back to this, you know, and just start stacking those gains again. I want to make money no matter what happens, but at the same time, we have to respect what the market conditions are and what they might turn into in the weeks and months ahead. So we'll see if we are getting a slowdown here, and if we are, let's embrace it and let's enjoy it and let's move on to those other trades that are working and just go from there.
Yeah. Yeah. No, that's great. Be patient, be a chameleon. Great final final message.
Yeah, man.
Um, okay, cool. Well, thank you for having me. I'm sure I'll be back within the next 6 months. So everyone can remember me. I'll be back in chat and everything like that. So
Well, we need to have a poll feature in chat where we can vote whether or not you can be on top trades again. We'll have to see.
that's fine. Well, I don't know if I want that for my ego, so let's hold off on that for now.
Everybody respond whether or not they want Nick back on top
No,
trades.
no, please don't. No, I'm just kidding. I hope everyone has a good day. I hope you have a good one, Greg.
All right.
I'll
See you guys in chat
see you
tomorrow.
soon.
Later.